My name is Hogi. Today I'll be talking to you about the new revenue recognition standard and why it's important to you and why I think you should really pay attention to this new standard. Public companies really have gone into full implementation at this point, and they've noted certain key challenges that I think it's going to be worth for your attention. And we're going to highlight some of those challenges today. The first challenge that we saw in the new revenue recognition standard is the amount of time that companies realized that took for them to review the contracts that they have on hand. Part of this difficulties is due to the growth nature of businesses, complexities, and customers' demands as well. So as a result, the number of contracts really have increased in volume and in complexity as well. So companies are really struggling to review their contracts in a more timely manner. And that has really caused a lot of burden for companies to review them. The second challenge that we do have as well is related to the new disclosures that we have. These disclosures are mainly driven by the general public, your constituents, the investors, bankers that really wanted a more robust and enhanced disclosures on the new standard. And as a result, the accounting standard setting body have listened to them and really incorporated certain new elements of disclosures that's going to be required under the new standard. So what are examples of some of those new disclosures? The first example is the disaggregated revenue analysis, which your companies may be doing already. The second new disclosures that's required is more related towards the information on remaining performance obligation. And really what that means is for any promises to your customers that you have not performed yet or have not been completed yet, there will be new disclosures required on those, not just in terms of timing of when those will be completed, but also, more importantly, the value of those remaining commitments. Those will be required to be disclosed as well. So really a key question that you need to ask yourself is, what is the impact of this new standard? What are the new disclosures that you're going to have? And whether, more importantly, whether you have the current structure or the current system to really provide this data to you. So those are the key questions that you should ask. Again, the new standard is very detailed, very comprehensive, and if you haven't started your analysis, you're behind. According to a recent survey that was completed by a major public accounting firm, only 7% of the private companies out there have started the implementation process, and honestly, that's a very alarming rate. The difference between complying on time and falling behind is razor thin at this point, and that's certainly a concern, and you certainly don't want to be falling behind. Just an example, Microsoft recently adopted the standard. They're actually one of the early adopters. And as a result of the adoption, they've realized an additional revenue of about $7 billion, or 7% increase in their revenue for fiscal year 2016. They've done a good job to inform the analysts and the investors on that. And those information should definitely be something that is not taken and communicated lightly. And I'm sure for your company, if there are any significant impact, those type of information should be communicated in a timely manner. So to conclude, the information, the new standards is hard. It's complicated. If this is your first time hearing about the new standard, you're in the right place, you're in the right spot.